If you said to me, Shawn, you can only own one thing, what's the one thing you would own? It'd be silver. The investors that have been following people like yourself, following Rick Rule, putting money to work, we're patient, are seeing their portfolios explode.
This is Jay Martin.
Shawn, it's good to have you back, man.
Thanks for having me.
Okay, it's always a pleasure to talk to you. And there's a handful of different directions that I want to go today.
Okay.
I always appreciate your perspective on the gold and silver market. Sitting here on kind of a unique day, right? Gold's at all-time highs, silver fundamentals are strengthening.
Yeah.
And a lot of my audience is asking, like, is this sustainable? Are we overdue? Is the market getting too hot? And that's a relative question, right? Too hot relative to 6 years ago, 2 years ago, but relative to what? So what's your take? I mean, you're always on the road chatting to investors, raising money. What's sentiment telling you? But what's the background fundamentals that you have confidence in or that make you a bit uncertain?
Yeah, so from my perspective, I just took some investors to the Dolly Varden project up in Northwest BC. We organized a tour that was going to give these Dallas and Boston LPs exposure to the treasures of the Golden Triangle. And this group managed $9 billion. So there was 4 advisors. And so $9 billion assets under management USD. They had a 1% weighting to commodities, precious metals, mining cos. They were looking to increase their exposure from 1% to 3%.
Okay.
So that $9 billion, that translates into about $180 million US that was looking to get more exposure. So we started our tour off at Dolly Varden. We went through some of the other projects that are in the area. Some of them are owned by their companies, but we wanted to give them a look at the different geological aspects and mines that were both in production, in development, advanced exploration. And the reason I bring this up is I've been listening to people like Rick Rule talk about, the percentage of allocation from the generalist investor. I witnessed it firsthand on this trip. These are 4 investors. We're talking about a $40-50 million per investor allocation to the space. And I think as a result of the leaders, the Agnicos, the Newmonts, trading at $200 a share, $100 a share, that is now attracting generalist money. So it's begun. Why I feel like it's early is the indicators and the relative value. I'll give you an example, the silver to gold ratio still being at 90-1. If silver's price appreciation was accelerating and drastically outperforming gold, I would be cautious and concerned. Look, I can't time short-term corrections. Are we overdue for a correction? Possibly. Jay, I thought we were there in March. And what have we done? We've just gone higher, 50% higher in the metals, in the shares, hundreds of percent higher. So are we overdue for a correction? Anything can happen in the short run. But because we came from such a undervalued position, I talk about the venture exchange a lot because that's the index a lot of the microcaps live on. The venture exchange is at a 52-week high, but it is only at 850 points.
Right.
That's an index that we wouldn't even consider financing a company a decade ago if the index was below 1,500.
Right.
So the index would have to double just to get back to a place where we'd feel comfortable, where as issuers, as shareholders, we're not diluting our companies. The venture exchange has seen highs of 3,500 points. So we would have to go up almost 5 times in value as an industry to get back to previous highs. And that's not factoring in inflation. Those are just nominal highs.
Yeah, that's important. Okay, I appreciate that context, and I just want to unpack this investor group a little bit. 9 billion collectively under management. They're moving from an allocation of 1% to 3%, probably because they're watching the share price performance and the earnings of companies like Agnico and Newmont. What can you tell me about their mandate? Like, what kind of money is this from a time horizon standpoint?
So this is university endowments.
Okay.
This is pension money. And what surprised me was when I heard about the trip being organized, I would assume I had an idea in my mind of what these investors would look like. And they looked nothing like what I thought they'd look like.
What do you mean?
Well, they were young. I was expecting some older, more mature, gray-haired fund managers.
Sure.
These
A lot
were
of money.
Yeah. And so it was a young group. It was a group that understood mining. It was a group that said, look, we know the volatility. We know the cyclical nature. We have a stomach for this. We're not investing for a quick return. This is, pension money. This is looking out years, if not decades. And what's interesting is they have an appreciation for why this industry is so rewarding. It is because it is so tough. And having smart, sophisticated, long, sticky money like that enter the space versus what you typically see at the end of a cycle is the masses of retail investors. This is still stealth. This is smart money. This isn't a calculated bet. This is not, I need to come into any deal. These are people. And what the other thing I saw was recently there was a deal that got put up in Nevada. Diane Garrett's Highcroft, $60 million U.S. financing, 2 investors, 66% of the issue taken down by Eric Sprott, the other 34% by Tribeca, which is Jeremy Bond's fund out of Australia. What you're seeing here is participants in the space like Eric, like Jeremy, have been so rewarded with these share price appreciations that they're able to take really big bets and support names.
Okay.
The old Allied Nevada, which were these Highcroft assets, I think the peak valuation in the 2000s was close to $10 billion.
Mm-hmm.
They're coming in at probably a sub $150 million valuation for what was a $10 billion portfolio. So smart money who's, you look at some of Eric's bets, Discovery Silver, America's Gold and Silver. These companies are up 4 times since January.
Yeah.
And he had a lot of exposure and has a lot of exposure to these companies. So the investors that have been following people like yourself, following Rick Rule, putting money to work, we're patient, are seeing their portfolios explode. I'm talking to friends and participants that are saying things to me, and these guys have been around for decades. Their net worth has never been higher. And the price appreciation to their portfolios on a daily and weekly basis is significant. So I know it feels frothy. I know it feels like there's a lot of activity. I know it doesn't feel sustainable, but I'm not considering the quarter. I'm not considering to the end of the year. I'm looking at this as a cycle. And I'm telling you, based on relative valuations and all the ratios, it's early days. I don't even think it's the 3rd inning.
Okay. Yeah, I appreciate that in that expansion. And then I just want to ask again, back to this group of investors, because 1% allocation is not much, but it is something. And it makes me wonder, are they still the outliers and the minority when it comes to those generalist funds? They're looking to move from 1 to 3, but are they still, would you say, like the smaller group? And these are generalist funds. They're still the smaller group that are looking to make this move at this point. Like they're maybe the first movers in the generalist funds.
Yeah, like look, I've been financing companies for 22 years.
Right.
And if I were to examine that 22 years of experience, and I could study history, but when studying history and living it and breathing it and being on the front lines, those are 2 very different things. So if I were to pinpoint the hardest time I've experienced in this sector, it was the years from 2013, 14 to in and around 2017, 18. That to me was the most difficult part of my career. Okay. Just to give you some context here, the difference for me from 2010 to to 2012 is the $130 million bought deal I was facilitating at $1 billion valuation at $5 a share. That $130 million deal, I was struggling to arrange a $400,000 financing at sub $10 million valuation. So $130 million versus 400 in an 18-month period. That's the difference. That's the contrast. So my point in all this is what we've done as an industry, okay, is we have relied on the generosity and the speculation of serial investors like Eric Sprott. You go back to those lean years, I think it was 2017, where Eric invested about $250 million into small caps. Eric probably represented anywhere between 25 up towards of 50% of all money that went into the venture exchange. Those lean years, we relied on corporates like at the time Gold Corp, Barrick, Agnico as 50% of our funding. The balance, there was no retail or very little. The balance was hedge funds. Hedge funds that were clipping warrants, that were short-term oriented, that saw this as a predatory, opportunistic trade. We are starting to see some fundamental long accounts like the Franklins of the world up their allocation, up their bet sizes in financings. But to answer your question, like this is, we're starting to see some really big money allocate peanuts to the space. And it's just starting. But really it's, when I look at exempt lists, I've got dozens of companies in the office, in the Fiore Group. When I look at exempt financing lists, it's the same old names. There's very few new participants. I saw more new participants in 2019 than I'm seeing today. It's just the bet sizes, because of the capital appreciation for those participants, has increased.
That's interesting. I mean, my first thought was, and that's why I wanted to ask about what kind of money this group was. You mentioned the hedge funds that, back then were more quick turnaround. And I'm somewhat surprised that obviously the market was far harder, 2013 to 2017, the hardest tenure of your career. I'm sitting here and I'm like, yeah, but you got way more on your shoulders today. Like hard's relative as well, right? Different mission today, but better market, better network, more experience, all those things. And just because you mentioned the Fiore Group, I want to unpack that a little bit because I think it's one of the most important. I love finding groups like Fiore because you guys incubate several deals all at once. But why that's important is because you can borrow each other's brain capital, resources, capital networks, workshop ideas, solve problems together, right? And it gives each one of those companies a massive advantage. And when I look at Fiore today, it strikes me as an organization that has a lot of chips on the table, right? In early stage, mid stage production in gold, silver, copper. And so the sentiment in the office, obviously led by the chairman, Frank Giustra, who, as I have watched him, is very specific with his timing, right? Walk me through what's going on in Fiore today and how the organization works.
Yeah, so there was an article in a local Vancouver business paper in 2002. And it was a still image of Frank and his back. And the caption was Frank's back.
Okay.
So Frank has been around the sector for over 4 decades. And he has got a reputation for being able to time entries and exits into the sector. That great rotation. Understanding when the sector is on its knees, understanding when the sector is frothy. And so going back to 2002, if you examine where gold was, sub 300, if you examine where gold equities were, if you examine where other sectors were like tech, that was the time. That was the best time. And if you look at the companies that he built and the Endeavor Minings of the world and so on and so forth, it was great timing. The reason I bring up this point is 20 years later, 2022, Frank once again came back. And that's when I partnered with him. and Rob McLeod and Ryan Waymark and Gord Keep, who's been with Frank for, over 4 decades. And we came together, and what we're trying to do is we're trying to attract talent, engineers, geologists, capital markets. We're trying to take advantage of the discrepancy between commodity price and equity price, and more specifically, the valuation of mining projects. And we're looking to put our capital and our shareholders' capital to work to unlock these opportunities. And so, look, it is something where our competitive advantage as a group is we've got 75 people in the office. Okay, on the 31st floor, where we've got the engineers, we've got the geologists, we've got the capital markets professionals, and we're sharing ideas and we're helping each other accomplish these mutual goals. And it's, in my opinion, led to some outperformance of our companies. And again, we've taken risks, and it hasn't been easy. And in some of the cases, it's taken longer and more money than we would have originally forecasted, but we stick with it. We work through it. And you know what, if there was one lesson that I've learned over 22 years, it's people. If you bet on the right team, that's the key. And I think Frank has an ability to identify, attract, and retain talent. And that talent, mining's a tough business. You get into a great project, it's a depleting resource. You've got to replace it. It's this constant, ongoing process of evaluating, buying, divesting, financing. But once you're around it, you have that competitive advantage of knowing the projects, knowing the people. And then if you're innovative and you're creative, you're using cutting edge technologies to unlock processes, whether it's in metallurgy or whatnot.
I love that. And is there, when you say there's a definitive style in the companies that you guys build at Fiore? I know some of the biggest businesses that Frank has built have been sort of the buy and build strategy. But not all the companies in the Fiore office seem to be on that sort of same philosophy. So is there a similar model, or is it like CEO-led, we support your vision?
That's a really good question. Look, I think there are core Fiore files. There are non-core. It's a fluid environment. It's a case-by-case situation. The driving principles are, stakeholders and shareholders and investors first, because, Frank is often the lead investor. And so it's a focus on ROI, but it's a challenge to try to evolve to do something even greater than that. And I'll give you a couple of examples. You look at Nations Royalty, which was launched on June 21st, 2024. It is today Canada's largest Indigenous-owned public company. We're developing a reputation to be great purchasers of distressed assets and turn them around by bringing the appropriate capital and technical to those opportunities. What we've done in a new initiative, Selkirk Copper, is we've taken the distressed asset purchase, which was the Minto mine, and we worked with the Selkirk First Nations. Selkirk First Nations bought the mine out of bankruptcy and will be approximately a 20% shareholder going forward after, somewhere which will fall into around a $40 million capital raise. And so my point here is working with communities, putting communities first. Historically, Indigenous groups were given a small tax sharing, maybe in generous scenarios, maybe a 1% royalty. Why not have equity participation where the First Nations has 20% of the business? So that's not just great ROI for your shareholders, that's inclusion. That's having Indigenous groups that have never been a part of capital markets being part of the process and sharing in the prosperity of the projects.
Yeah.
But it also ensures that in an environmental and a socially responsible way, the project moves forward and advances responsibly. So it's aligning all of those interests.
I love it, man. Okay. I want to pivot to silver a little bit.
Yeah.
You got a lot of companies in Fiore. You're the CEO of Dolly Varden Silver, obviously. So the question came up at dinner last night with some friends. We can understand why gold is hitting all-time highs because people are losing trust in the US dollar. Their purchasing power is being eroded. Central banks feel the same. There's a lot of high-level factors playing in there. What's behind silver's rise? Is it the same sort of monetary elements? Is it the industrial capacity? What's, from your perspective right now, Shawn, what's supporting that?
So I just want to start off by saying, if you said to me, Shawn, you can only own one thing. You can only own one thing. What's the one thing you would own? It'd be silver. And the reason for that is, to really understand silver, you have to understand history. And for 5,000 years, silver and gold were together as money. And what has occurred is as the fiat currency of the day dominates the zeitgeist, and in today that is the US dollar, we have gone away from gold and silver being our monetary base. What was once convertible into US dollars is now convertible, but at $3,500 an ounce. And so to understand how silver's role has changed, like if we stopped mining gold today and by some scheme lost all the gold that we had on planet Earth, we would be okay. But it would be highly disruptive if silver was taken out of the equation. There is no substitute for silver. It is one of the most special, strategic, critical elements on planet Earth. And it's so special that it has lost its historic monetary base. It is transformed from being money to now being both money and an industrial metal. 100 years ago, 10% of silver was used in industry. Today, it's over 50% and growing.
Right.
So I think what's behind silver's price surge is twofold. It's the monetary aspect, but it's also the industrial aspect. Look, we're living in a world right now where there's a shortage of silver. Okay. We're consuming more than we're producing. It's that simple. And what's really exciting as a silver-centric investor and speculator is the fact that if somebody went out and bought 50 million ounces of silver and stood for delivery tomorrow, that the squeeze could be on. And, we've already seen the price surge from $25 in April. It's got over $41 an ounce. If someone were to take delivery tomorrow on a mere 50 million ounces, we'd be at new all-time highs in US dollar terms. We're already there here in Canada, $56 silver. You're seeing it in every other currency. It's only in USD. It hasn't broken out of the $50 price high.
That's how tight the market is. Yeah.
That's how tight the market is right now. We're 50 million ounces away.
Yeah. Okay. Now, this group of investors that you were showing around and touring the Golden Triangle, where your project is based, Dolly Varden Silver, for somebody who's maybe got fresh eyes on what you're building, Shawn, walk us through the super high level, and then I want to get into some recent catalysts with the company.
Yeah, look, my experience brought me to Dolly. Being around gold, building gold mining companies, I saw how silver reacted during the last great boom in 2010, 2011. We went from, I don't even know where the silver price was in September of 2010. I know where it went in April of 2011. It went to $49 and it was a surge. So let's just say sub 20 to almost 50 in short order. And so I've never seen anything that explosive, and I've seen uranium booms, and I've seen some pretty, exciting, explosive, commodities are quite volatile. But my best thinking said, I need to get silver exposure for this next precious metals move. And so in 2018, I really started studying the silver market, like I had studied the gold market from 2004 to 2018.
Okay.
And so I've been all in on silver since 2018. That led me to unearthing Dolly Varden and taking over in February of 2020. what attracted me was I found an asset, a high-grade asset, 2 past producing assets in a safe jurisdiction. It had grade and it had safety. And it was trading at 37 cents an ounce in the ground, USD. And I knew from previous bull markets, these ounces will be valued at $3.30 an ounce USD in a bull market. So I thought there was a 10x to be achieved for my shareholders.
Sure.
So I came into the company, and what I've tried to do, Jay, is I've tried to build out our base. Okay. And what my strategy was this year specifically is I felt like we were coming into the beginnings of a market.
Mm-hmm.
So I listed the company's shares on the New York Stock Exchange on April 21st. I went to the biggest market in the world. I went to where over 90% of North American capital is centered. That resulted in a 38% price appreciation in Dolly Varden shares. I used that price appreciation to execute 3 M&A transactions in the month of May. We had the most active quarter of the company's history in Q2. We went on to New York. We went from 15,000 hectares to 100,000 hectares. We went from 2 past producing silver mines to 5, including some of the richest mines in the Golden Triangle. We raised on the back of that just under $30 million, enhancing our treasury to over 50. We did that at an all-time high in terms of share price and minimizing dilution. And then we launched a 55,000 meter drill program. So we have been busy. And, what I've been telling shareholders is at 5.5 years at Dolly, as the company's gone from 20 million to 500 million, those first 4 years, I was playing defense. I'm now playing offense. And we are into a situation right now where we're into the biggest drill program we've ever seen.
Mm-hmm.
The ambitions that we have as a company is to create the next Coeur, the next Pan American, the next Hecla. That's the goal. Success for me is to come back here soon and lay out that plan on how we transform to complete that vision and to continue to come back as this company continues to grow. What I'd love to see here is production, a development pipeline, exploration, and a portfolio of marketable securities. Because not everything that we acquire is going to remain in the mothership. We want to start generating value. I'll give you an example. One of the transactions we did, we bought a 35% interest in a very, very high grade property in the Golden Triangle. Our cost on that 35% interest for our shareholders is $9,000. Jay, I'm confident I'll be able to get more than $9,000 of value from that project, a lot more. And so, I just think we've gone through this period, and we're still in it, where there's a lot of management teams that are a lot older than me. There's a lot of companies that don't have what Fiore has. They don't have technical. They don't have access to capital. There's a lot of projects that even today are trading at depressed valuations.
Yeah.
It's my job for my shareholders to unlock those opportunities. We have a high bar. We want the best grade projects. We want to be in tier 1 jurisdictions. We're a silver co, right?
Yeah.
So we have certain criteria.
Silver primary, and that's remained the mission.
But the truth is, the secret truth of our industry is if you dissect and interrogate and investigate the 10 primary silver co's, some of them, only 28% of their production is derived from silver. And so it wouldn't be out of character for us to consider other metals to achieve our ultimate goal, which is giving investors exposure to silver. So look, we bought Homestake. You had me on. We really got to know each other after the Homestake acquisition back. It was announced in 2021. It was closed in early 2022. That's a gold deposit with a silver byproduct.
Yeah.
But it was so wildly accretive for us, and the cost was right. And if you look at the company pre-Homestake, we were trading at about a $50 million valuation. We're 10 times that value today. And so we need to trust our experience and our expertise and be very bold in the decisions we make. That's how great companies are built. And we have the building blocks and the ingredients to create a great company. And we're working extremely hard, and we've been in the space a long time. And so, look, we have no debt on our balance sheet. We have over $40 million in the bank. We just put out the best drill hole this project's ever seen. So we've been blessed with great geology, which is what you need. I've got a great team. So all the earmarks are there for a very successful company.
Okay, so post NYSE listing April 2nd, you use that new currency, that share price appreciation, to effectively like 10x the land package, right? More or less 15,000 up to what is 110?
6 times, yeah.
Yeah, six times. Thank you. Fill up the treasury, 50 million in the bank, and launch the 55,000 meter drill program is colossal. That's really, really big.
5 rigs, 24 hours a day, serious.
Okay. And just because you referenced your drill results, your recent drill results from the Wolf fame, correct? This thing's become a bit of a growth engine for the company. So walk me through what you've uncovered thus far in this program and what we can expect next.
Yeah. So the tough thing in our industry is primary silver. Like silver is a byproduct. 75% of it comes as byproduct. So when you get into one of these primary silver systems, it's special. It's the 1 in 4. And so if you look at Dolly, which was the richest silver mine in the British Empire, if you look at Torbrit, which was Canada's 3rd largest silver producer, these are some of the best silver mines ever in Canada in terms of grade, in terms of quality, in terms of mineability, metallurgy. You start ticking the boxes. These are great mines. What Wolf represents is a vein and a deposit that can be classified with Torbrit, with Dolly. And so what Wolf represents is growth of that history on the property. And so what started as a little surface expression is now over 1 kilometer as a strike length. And it's demonstrating, we drilled 1,422 grams of silver over 21 meters. Mm-hmm. And it's open, it's high grade, that's not a silver equivalent, and it's 21 meters.
Very wide.
So all the credit goes to Amanda Bennett, Andrew Hamilton, Rob Van Egmont, Rob McLeod. We've got the right mix. We've got a young team that's also in the field that are looking for the next Wolves. We've got a couple of veins in Moose and Chance, Musketeer, and other showings that we're going to be putting more information and data out on. So it's an exciting time, but the secret truth of Dolly Varden right now, when you have a 90-to-1 silver to gold ratio, the rigs, all 5 rigs are up at Homestake.
Okay.
They've moved from Wolf and they're up at Homestake.
Okay.
And look, the only assays I have are the Wolf assay we put out. We just started essentially drilling at Homestake. But I bet you the numbers we pull out of Homestake are going to rival what we do at Wolf, if not exceed them. And it's because of that ratio. It's because gold is valued at 90 times more than silver. And despite us having 64 times more silver than gold, the economics of the project today are on the gold side.
Yeah, because of that ratio at present.
Yeah.
Right. And Homestake, depending on what you find, may drive that further. We'll have to wait and see.
Yeah.
Okay. Shawn, you've been incredibly busy, man. And it's been fun covering the story since that Homestake acquisition, which has now been 3 or 4 years. And you continue to increase the ounce count, deliver on what you tell shareholders you're going to do, which is an anomaly in this business. So thank you for that. And
that's going to look like a small deal for what we have in store.
I like it. Hey, I believe it, man. And I can't wait to see it. Yeah. So I'll stay tuned for news flow.
Okay.
It's always good chatting with you. Thanks for coming in today.
Thank you.
All right.